Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Friday, October 7th, and we got slaughtered today. We really did. There was no other way to put it. Pretty much all the gains from earlier in the week got wiped. We actually did finish in the green on all major indices, but that huge move that we saw, what we talked about yesterday, with the island formation, kind of looking like a relative bottom. I mean, it just went right back to that, basically. So we'll take a look at it in a second. But if you like this type of content, I come out with one of these videos every single day that the market is open. So be sure to subscribe on YouTube and follow us wherever you listen to podcasts. And on the weekend, I come out with a longer episode that goes more in depth and just it covers a lot more things than what we get to cover in these daily episodes. So be sure to stay tuned for those as well. If you haven't watched or listened to last week's episode, be sure to do that. And then there should be one coming out tomorrow as well, and that's going to be a great one. So be sure to subscribe and follow for that as well. But let's get into what happened today. So it's interesting because what crashed the markets today was actually good news. So the jobs report was strong, unemployment fell, and the market didn't like that. And you might be asking yourself, why is the market going down so heavily off of good news? And that's a good question because it might seem irrational. But it's not. So basically what that means is the job market is still strong, or allegedly strong. So that gives the Fed the green light to continue its death grip on the economy. So they're going to continue to tighten aggressively because the jobs market is not shaking, really. That's what they see right now. So it makes it okay for them to continue tightening the economy as tightly as they say they're going to. And that's not good for stocks. So the market dumped off of the strong jobs report. That's what happened today. The Fed's not going to pivot, and the markets didn't like that at all. So we're back down. We're down over 30% on the NASDAQ year to date now. We're around 23 or 24% on the S&P. Excuse me. And we're down just under 20% on the Dow. So we did finish the week in the green, but it didn't feel like it because today we kind of got wiped out. But that was to be expected for a strong jobs report. I mean, that's the only reaction that I would have expected, I guess. So if we take a look at the S&P 500 on the chart, so we talked about yesterday how it gapped down to it, created structure, and then gapped out, and how that can be a really bullish signal. Well, the problem is that we're right back on the bottom of this zone. So we proved on, what day was that? The 30th of September. So what was that? Monday, Tuesday, Wednesday, Thursday? No, that was last Friday. So that we proved that we can break below this zone and find support, and that's what happened on Friday. But I don't like our chances if we break through the zone that we have mapped out here. Even if we get back down to here, I don't think there's going to be a ton of buying because this just felt like a fake out to the downside. I think if we break through it this time for real, it's going to be for real. So I could be wrong. Again, obviously, do your own research before making any investment decision, but that's what I think is going to happen personally. If that happens, then that's what I think will happen then. But if we break through here, I think the eventual point that we have to get to is to touch this channel line. So what does that look like? Well, I think most likely it looks like a 3,200, just about, or maybe a little bit below. So I think that 3,250 and below is definitely a reasonable range. And if we come over here, let's see if 3,200 makes sense. So where would that be? Well, 3,250 definitely makes sense. This was a big point of resistance back in 2020, and then it turned into support, and the market actually really bounced off of here and ended up going into its long-term channel, which it stayed in until it crashed. So it would actually make sense if we came back to a 3,250 and touched there, and then that would kind of coincide with like the market coming down to like right here. So it actually wouldn't be a full channel line touch. Maybe we actually get there on like a weekly. Maybe we touch and then bounce off, and then the weekly closes at like a 3250 or something like that. But that would be a meaningful range to have mapped out, is the 3250. And if we do end up breaking below this zone, then I'll do it off screen so that you don't have to watch me create the zone on screen. But that's what I'll be looking to. And if you're wondering what this zone is that I have mapped out down here, this is like my absolute floor for the market. That's what I have mapped out. And if you're wondering how I got that zone, I took the first leg down, which was this. So I took this distance right here, and I added it to the second leg down, which you could say was this right here. I added them together from the bottom of this second leg, and it took me to this zone. So that's where I got that from. And if you're listening to the podcast, I added the first two legs down, and it brought me to like a 27.30 to like a 26.60, 26.65 on the S&P 500, and that's like my absolute bottom. So if shit really hits the fan, say like Credit Suisse defaults, and maybe that leads to like another bankruptcy or something, say the war gets a little bit out of hand, like even say, I don't even want to like say this in an episode, but say certain weapons get used, with Russia and Ukraine and NATO and everything, like say that really, really gets messy, then this is like a floor that I'm kind of like looking at. So that's why that's on my chart, if you were wondering. If we end up breaking through this, I'll create the next zone, that like 3250. I'm going to put that there first. And then if we get some sort of structure, then I'll add that to the charts. But that's what I'm looking at. Sorry that I'm taking so long. Let's go over to Bitcoin. And I mean, it's looking a little bit scary for Bitcoin. So we had this trend line. It's been on the trend line since November, or it's been on the chart since November of last year. We were wondering if it would hold again. It did. It does not look like the Bitcoin market wants to break through this trend line. And if the market breaks through the lows, it's going to be tough for Bitcoin to hold this zone. And I've been talking about for months what happens if Bitcoin goes through the 17.5 to the 17.7. We're headed to 12 to 9,000. I don't think there's nowhere for the market to catch itself until 12,000 at least, and probably 11 or 10,000. Like, I actually want to talk about this a little bit more. So here's what I see happening in a absolute watershed moment for Bitcoin. So let's say the S&P 500 breaks through this zone and starts selling off aggressively. I can see a situation where, just want to make sure that's still lined up. Okay. I can see a situation where Bitcoin sells off from this zone and it gets bad. Again, we don't have support till like right around here, the 12,000 to the 9,000. So like right in this zone right here where my cursor is. So we break through this zone and we sell off aggressively, and it's panic. Okay, we hit the 12,000. Maybe we get a little bit of like structure and it goes up to like anywhere, anything. Maybe it even goes up to like 15,000. And then we come back down or something. It doesn't have to come back up, but you get the point of what I'm trying to say. The 12,000 is where we would kind of get that first level of like buying, serious buying, enough to where it would stop the market from falling. I definitely can see a situation where it comes back down and maybe it even cracks below 10,000 for like 10 seconds. You know how the Bitcoin market, it moves like really, really fast. So I think we could definitely breach and get into like the 9,000s for a couple seconds, literally a couple seconds. That's how fast the Bitcoin market is. And then it would pop back up into like 11,000, and we'd have like maybe a little bit of structure there for a couple days or something. And maybe we'd hit like the 12,000 and that would be like a resistance point at that point. And then when the market starts to recover, so let's say we hit like a market bottom on the S&P 500 at the same time, then Bitcoin could then crack the 12K. And then once it cracks the 12K, we'd probably have no real resistance till we get back to like the 17. And then we'd be back at this zone as like a resistance. And then from there, it would do its thing. But for Bitcoin to like truly bottom, that's what I see happening. I think my bold prediction is that it breaks 10,000 for a couple seconds and we get 9,800 for like 5 to 10 seconds. That's my bold hot take on Bitcoin. I think for that to happen, the market also has to sell off. So the market comes down to like the 3250 in that situation. But I think we're kind of headed there. Aside from the Fed at this point, there's just a lot going on in the world that it's just not only is it not good for markets, but it for sure doesn't justify the types of valuations that we saw the last 2 years. Like we're just now getting back to like a 14.5 or a 15 PE on the S&P 500, which is traditionally fair value. And we're just getting back there right now. So you can't even really make the argument that stocks are cheap. Like there are great businesses on sale for sure, but the market as a whole is not cheap at the moment. So there's definitely a lot more room to go down, even though we're already down over 30% on the NASDAQ and we're down like 24% or 23% on the S&P 500. That doesn't necessarily mean that stocks are on sale, go dump everything into stocks. One, you don't want to fight the Fed. Two, there's a lot of scary things going on, which shouldn't scare you out of investments, I just want to say. But there's a lot of things going on outside of the Fed geopolitically, especially with militaries getting involved with each other, that it doesn't make stocks cheap. And then third, the valuations just aren't there to justify that yet. So that's my opinion, my 2 cents, just me thinking out loud. Again, do your own research before you make an investment decision. Don't just listen to me. And I think, although it's a scary time to invest, like we mentioned this past weekend on the weekly wrap, you have to keep dollar cost averaging in if you're a long-term investor, because these are great prices, even though that there could be more room to fall. But Bitcoin is one that I'm going to be watching closely. The reason I include it in the daily show every single day is because I believe in it as an asset class, as an asset, not even as a currency, but as a technology and a new way for us to interact with each other, just like the internet. So that's why I include it. You don't have to like Bitcoin. That's why I usually have it at the end. But yeah, those are my thoughts. Man, it's been a crazy week. It's been a crazy couple months. We really got faked out here. If the market does end up breaking through this low, that was a great fake out. It would make sense now that I'm looking at it. So we were talking about the island. It gapped down, created structure, gapped back up and created structure in this little gap right here. And then imagine if it just, because this gap has already been kind of like filled by these candles here. Like just imagine if we broke below. Oh man, a lot of people probably lost a lot of money if this goes down below. But again, anything could happen, so it could definitely pop back up. We'll have to see next week. I'm going to wrap it there, and I'm going to stop rambling now. I just like to give my thoughts sometimes. Thank you for watching or listening to this episode. Be sure to stay tuned for tomorrow's episode of the weekly wrap. It's going to be really, really good. I'm going to try and sit down and just give my candid thoughts like this. Obviously, I'm still going to have the charts and everything, but I kind of want it to be a little bit more conversational and just me giving my thoughts instead of just reading charts. Because I feel like right now that can maybe be a little, not more beneficial than me reading charts, but it adds value that reading the charts doesn't really have. So that's what I plan on doing for tomorrow. If you haven't watched or listened to last week's episode, be sure to do that because that was a good one too. And I'm going to leave it here. So thank you for listening and watching, and I'll see you tomorrow in the weekly wrap. Thanks.